absolutely delighted that you are here and you're not blowing your 150 million at Aintree today. If it's about small cap intelligence that you want to learn all about, you've come to the right show, you've come to the right panel, and you're going to be hearing from a load of right ones. So let me talk you through who is going to be sharing their intelligence. We have got Mark Watson-Mitchell, whose aptitude for picking good, solid companies and then sharing his intelligence on the Master Investor platform is legendary. Equally prolific to my left is Stuart Fieldhouse, editor of online platform The Armchair Trader. In his spare time, he writes books, advises fund managers, private banks, family offices. He does a mean snow plough when he's skiing. And, what is the collective noun for a lot of editors? Because finally, we've got Sam Volkering. He's editor and investment director of Southbank Investment Research, global authority on crypto. His crypto handbook is out July of this year. So we are at the start of quarter two. I don't know how you fared with quarter one, but let me take you back to September 2021, because we were enjoying an upward trajectory on the FTSE small cap index. It stopped and that graph started to go in the opposite direction. So technical analysis aside, Stuart, what's your thoughts? Should we be hopeful about the trading environment now at the start of quarter two?
I think it's a very strange trading environment at the moment. I've been involved in markets for coming on 30 years now, and we've got a situation at the moment where everything seems to be being driven by macro news, macro indicators. There's an enormous amount of focus on what the Federal Reserve is doing, and that seems to affect everyone's decisions, and we're even seeing that sentiment filtering down into the small caps market, which seems crazy to me. But a lot of the news is being dominated by these big macroeconomic events. Is China opening to COVID? Is China not opening? And I think that just seems to be filtering down to everything else. And I think from a small caps perspective, that means that it makes things a little harder to pick stocks that you're going to see some kind of short to medium term return from. Long term, you're still going to see gains from good quality stocks. But at the moment, we're seeing a lot of really good small cap companies that are trading at valuations they simply shouldn't be. And I think the big theme is the fact that a lot of investors are just sitting on their hands and not in the market. I had a meeting with a big Swiss wealth manager about 3 months ago, and he says most of his clients in Switzerland are just sitting in cash, waiting for something positive to happen on the geopolitical stage before they jump back into small caps. So if big hitters like that are sitting in cash instruments, even in the middle of a Swiss banking crisis, just seems like a ludicrous situation, but that's the one we have to live with.
So let's pick up on that word, ludicrous. So Mark, you're a glass half. You're a full glass man. What's your take on 2023 so far?
Well, I'm continually disappointed by the number of companies that are coming out with missed profits, missed sales lines. I still think there is massive value in the small cap sector, absolutely massive. But you have to do your homework, and I believe that we mustn't be too influenced by what is going on in the FTSE 100 index, which is just international stock and is just oil stocks. And that's being driven higher. I cannot understand the value that people put on the FTSE 100. Look at the small companies. The UK is about small companies and the way that they grow, and they should be looked at a lot more. I see any of the sectors within the small cap sector being really interesting business. You've got to look for value, and don't hesitate, and don't get spoofed in. You can see an awful lot of market movements that are basically spoofing. You actually see sometimes, I won't say with brokers, where you can see brokers actually driving prices higher before they do issues. And it's not always their money, but it's their clients' money that it happens with. And then the outcomes the issues, and suddenly the price falls 20%, and you go, oh,
So what
just been sweating.
So for those who don't know, what does spoofing mean?
Okay, well, it means effectively leading investors over and getting them to buy stock in companies that really are ahead of them doing anything, and the brokers doing anything. It gives them manoeuvring space. So if you take a company up from 100 pence a share to 120 pence, and then you handle an issue at 120 pence, then you can actually do it at 100 pence with a 20% discount to the last price. It's all a matter of manufacturing. But
So-
that goes a bit too deep, sorry. Stick to small caps. Value.
Okay, so Sam, should we just put equities aside, leave our portfolio to passively manage itself and study and get involved in crypto?
Yeah, absolutely. I mean, you got to look at your whole portfolio, really. I mean, we're talking about small caps or micro caps or crypto. I think what the last year and a bit has really taught us is that most people invest well outside their actual risk profiles, and that most people are not actually prepared to take on the kinds of risks that they should take on. Having said that, I completely agree with these guys as well, is that macro factors are pushing the market massively as well, even in small caps. And so that what we end up finding is that these macro issues that we all face are forcing investors to take on more risk than they should, just so that they're not effectively losing the value of their wealth, particularly people heading towards retirement. So it's a tricky one. But people look at crypto and then they think, oh, it's even riskier again, and it's an area that's full of scams. And, I mean, if you apply that rationale, then you shouldn't be investing in the stock market either, because they're very much the same thing. If anything, when you get a better understanding of how crypto markets work and what's involved, you find that it's actually very similar to small cap and micro cap investing. So if you haven't got an allocation to cryptocurrencies, or at least crypto-focused companies that are publicly listed in your portfolio, then you're doing yourself a massive disservice. Because the way that the cycle is set up, and I think we're entering the fifth cycle, the fifth boom and bust cycle. If you haven't got exposure to that, and again, it's about managing your risk, and we're talking a real big asymmetric risk thing here, a little bit down a lot of blue sky potential, but also, massive risk. So I think you've got to have an allocation and exposure to it. It doesn't have to be huge, but I don't think you want to be sat on the seat with your hands underneath, or like the people in Switzerland seeing cash while this all takes place in front of your eyes.
So let's start to name names, because you talked about crypto-related stocks. So are there any that are stand out and will give us good returns, or are on the cusp of being revenue generating?
It's a tricky one because they've all gone through the massive bust cycle. So they ride the crypto prices really hard. So you look at something like Argo Blockchain, and it was on the verge of bankruptcy weeks ago, a couple of months ago. But they managed to sort of evade that for the time being, and from the bottom the stock's up like 5-6 times. Having said that, it's also down still about 90% from its highs. And people are like, well, down 90%, it's never going to return. Well, they said the same about Riot Blockchain in America, right, when it was trading at $1 or something like that. And in the last boom and bust cycle, I think it ended up 20x or something like that. So these stocks boom and bust a lot. There's a few on the Aquis exchange as well, that when you sort of dig into the detail, like KR1, and see what crypto they've got exposure to, you look at the net asset value, it's quite easy to see that there's a bit of a mismatch there between pricing and KAV.
So crypto still is viewed as the dark side. In terms of the companies that your writers and yourself have been selecting, which ones have been standout for you, Stuart?
So certainly in the small cap space, as I say, what we look for are ones which have very good valuations at the moment, and where we think they've got a pretty solid management team, and where there's a really good macro story as well. So one that we like at the moment is Conduit Ray, which is a reinsurance company. They're coming on our podcast next week, but they're recently listed, but they got hammered in 2022 because of the Russian invasion of Ukraine, and they got really heavily sold down, well below where they should have been valued at.
They're also trading in a very tight market in terms of reinsurance at the moment. So this is not a long-term play, but we think that one is certainly something that's going to look good over the next 18 months, just because it has those market circumstances right now. The other one we like at the moment is Gaming Realms, a bit controversial because they're heavily exposed in the online gaming / gambling market, but they develop the technical software elements of these online gambling games, and they've been making great strides in the US market as the US is opening up more to online gaming. Listed in the UK, but I think the potential market size in the States is going to be enormous, and historically I found some stocks in that sector do seem to still do well during periods of market volatility and during periods of recession too. So it's I think going to be one to overseas for decent returns.
Mark, decent returns. Which companies have been getting your attention, your focus?
Well, my favourites currently are Central NIC, or Central NIC, the Internet Domain Registration and Services Systems. I think that is a total money machine. Absolutely incredible value. 123 pence a share. I see them going to £2 easily. It's a real cracker. Another stock I like is Braemar, shipping services business, which is actually now expanding its services. They are extremely well managed, and I see their shares, which are about 307 pence currently, I see them easily doing 450, 500 pence a share. I'm not talking about tomorrow, I'm talking about medium-term situations. So when the market's going up and down, you don't worry about the stock. You don't worry about what's actually physically happening to your shares every minute of the day. You know, just you're happy that you've got investments in good companies. So that's Central NIC and Braemar. My other favourite is the old Harvey and Thompson group called H&T. Pawnbroking, jewellery sales, exchange. It's a lovely, lovely business. Again, pure money, pure financial management, very well managed. 4 strikes of their business, all doing well, and shares I think are currently they're about 450. They've got to be 550, 600 pence. It's a cracker. It's a lovely business. Harvey and Thompson, I'll bore you now. Harvey and Thompson, a long time ago, I had 15% personally of Harvey and Thompson, and it was a pawnbroking business in the old Kent Road, and it was a cracking business. Mind you, that's way before you were born, 1985, 86, and lovely, lovely business. And it went bust. It's rekindled, and it's now it's now called H&T. A lovely, lovely business. You've only got to see one of the headlines in one of the papers this week, and it said, over 1 million people are now going to loan sharks because they can't handle the cost of living. I mean, loan sharks, this is soul destroying. When you see a company like Harvey and Thompson, and they can actually help you on pawning stuff, if you're going to pawn stuff. So you're actually giving them your product to take money back on. When you've sorted yourself out, you then buy it back again, or you don't. It's very simple. But Harvey and Thompson, H&T, very good value.
I'm glad you mentioned Central NIC, because Central NIC's actually got a stand here, and Michael Rydell, the chief executive, will be speaking later on today. And yes, he is a lovely, lovely man, and we're not on commission at all. Now, we've only got about 4.5 minutes left. Time is just flying. So, Sam, what should we be looking out for? What is exciting you? You can talk about crypto if you want. We won't lynch you.
I mean, yeah, I'm happy to talk about crypto to people, but we've got 4 minutes, so come see me afterwards, so I don't want to take up all the time. I mean, I take a very thematic approach to the sorts of things we look at. When you look at a company like CentralNic, and some wonderful things have been said, and then you look at why they've got a chief AI and data scientist in the mix as well. So you start to look at these sorts of things with companies. I think the other thing that we're really looking at the moment is this fallacy around net zero and the move to net zero and ESG investing and all that sort of thing. And you've got to sort of look forward and think practically about how these things play out over time and whether they're even possible. And so things like e-fuel companies that are developing synthetic fuels for automobiles and vehicles. In Germany, they recently made a change to the legislation about the banning of petrol and diesel cars, and e-fuel synthetic vehicle cars will be able to be sold from 2030 onwards, and there's pressure in the UK for that to happen as well. So if that happens, you've got to think of the companies that are going to be impacted by that, as well as the EV companies and related companies to that as well. And you look at car sales, so you look at 2.4 million cars sold in 2019, I think it was 1.6 last year. Is that trend going to continue? Are new car sales going to drop? If so, do charging infrastructure companies look good, or do they not look good? The borough here, just before I came in, I saw that the borough here in Islington charges about £45,000 a day in parking fines. So if there are less cars on the road, how are councils going to get funded? How's the government going to get funded? So that's a massive drop in revenue for government. They don't want that. So it's not really in their interest to reduce the number of cars on the road. So you start to think about these things. So e-fuels, EV infrastructure, there's going to be a combination of that, crypto, AI-related things. They're all exciting, really big opportunities. And in this market, where things are quite depressed, and people are depressed, and investors are depressed, is the best time to be hunting around. And if you manage that risk and have a bit of that asymmetric risk in your portfolio, I think the next few years are going to be really good for you.
Okay, don't be depressed. Don't be depressed. Right, so you started, Stuart, on how macro decisions were impacting markets and influencing investor decisions. Is it going to be macro that determines trading patterns for the rest of the year?
My feeling is all it will take is a couple of pieces of really good news on the macro stage, and a lot of investors will be back into what are effectively some really undervalued stocks. I was talking to Ian Lance, who's one of the managers of the Temple Bar Investment Trust, and he gave me some interesting numbers. But basically, he said he pointed out that if you'd invested £1 in 1955 in large caps, that pound would now be worth £1,255. If you'd invested £1 in micro caps in 1955, that would now be worth £35,793. So that demonstrates that at the smaller end of the market, even without active stock picking, the returns are much, much bigger than they are in the large cap space. So, and looking at the valuations at the moment, I think they look really excellent. Once that sentiment shifts, that will be off the table and stuff will start getting more expensive again.
Stuart's here all day. Armchair Trader has got its own stand.
We have, yeah.
Sam, do you have
I'm just roving, I'm just mingling.
Look for the white shoes.
Just look for the...
I sent them an email yesterday saying polish your shoes.
I did.
He's with toothpaste.
I did.
And Mark, you're hosting lots of panels today.
Around.
Yeah, very
If you
good.
want to chat, anybody, delighted. Just collar me,
Yeah.
please.
Now, there is an app for this show. So if you don't want too much paperwork and save the environment, work towards the zero emission climate change environment that we're working on. So go to wherever you download your apps from, go to Master Investor, and it will help you plan the rest of your day. It's been an absolute pleasure, and we're out of time. That's our 20 minutes up. We shall see you around. Thank you. Thank you, everybody.
Thank you.
Thank you. Well done.